Before we kind of get started, just so I can kind of gauge the room, so I like to know who I'm talking to. Who's been in the business 1 to 5 years? 3, okay. 5 to 10 years? 1, 10 years plus, 2. Okay, all right. So a little bit of balance. Hopefully I'll be able to touch on something for everyone. 10 years plus, hey, welcome to the club. It takes a lot to stay in business over 10 years of real estate. Would you guys agree? 100%. 100%, yeah. Because especially in times like this where markets are uncertain, business is down, let's be real. It takes creativity. It takes, I'm going to say longevity, the willingness to stay in the business and go through the tough times. And I believe it takes the willingness to go back and dedicate time to your business, which is what we're doing today. And so thank you for coming to have the conversation, because that's what this is. This is a conversation. This isn't a presentation. I like to engage and understand why you're here, right? Because, okay, great, you came to talk or hear some guy talk, but what's the reason why you showed up? So I'm going to pick on a few of you because that's what I do. Hopefully Cam warmed you.
Have to pick all volunteers.
Perfect. Thank you. Milan.
There's so many things that we hear that, even on new homes, put down 100,000, 200,000, and the bank said they qualified 3 years ago. And they put in the offer and today they no longer qualify. So hearing any kind of, smart solutions to things like that, how do you navigate? So even with first time buyers, it's difficult, with interest rates.
Yeah, definitely. I'm going to hit that one right away because that's a good point. It's valid to the market and it takes us where we want to be. So it's unfortunate, but it's also the realities of real estate, right? People forget that the real estate market is, good morning. The real estate market is exactly like the stock market. It goes up and it comes down. And unfortunately, in times like this, where it's down, we have to be able to find solutions in order to be able to still transact. And one of the ways that people are able to transact in this market to fix, now, I'll be honest with you and say, not 100% of that deposit is going to be recouped. But the only way that you could avoid losing that down payment is by closing. And the problem is some people today are walking away saying, I don't have the extra $30,000 or $40,000 to close. Well, that's a mistake because in real estate, there are highs and then there are lows. So if you're able to close and if you purchased a good investment, a good property, that will appreciate over time faster than the debt that you're going to accumulate, the mortgage, the carrying costs, all the things. So 2 years, 3 years from now, if that condo that you're going to close on goes up, 5%. We made how much? Bad math, 50,000? So if you were to have to carry that same condo and it costs you, 20,000. You still would have made 30,000 if you closed. And so when I'm talking to people in this scenario, and I do a lot, I was actually having a similar conversation today, I'm giving them this math and then I'm telling them that fortunately we have a solution, and that solution is private lending. Because you have to close. And once you do, we can find a way over the next 2 years so that way it becomes affordable. And maybe it's not a 2-year plan, maybe it's a 3-year plan, right? Go ahead.
In the last 20 years, I really haven't heard of anybody getting a second mortgage.
Oh my gosh, that's because you're not talking to the right people.
That could be, so, like in the 70s, 80s, people needed a second mortgage. But the bank rules were slightly different.
100%.
That I'm not exactly sure how big it changed, other than they allowed the calculation of the spouse in the mortgage calculation or something.
Yeah, there's a lot. Since the 70s, a lot has changed. But what you're talking about is utilizing a second mortgage in order to close. And to answer that question with a traditional A bank, that's generally not something that's going to be allowed. Okay? What I was talking about in my example that I was giving you was utilizing private money to close that purchase of that condo. They're going to say, what's the value of the condo today? Right? They're going to do an appraisal today. And then they're going to give you 80% of the value of that condo. The client might still have to come up with some money, but when you have different lending options, meaning I'm not going to take that deal to a CIBC, a TD, or a Scotiabank. I might take that deal to one of my private investors and say, here's a client that needs to close. They need a mortgage for 1 year at 6%. The banks are offering 4.5%, but they get to close. And now over time, they benefit. So if they even need an additional $20,000, $30,000 because they're short, that private lender then looks at this as, okay, how can I benefit? Right? I give them the extra money. It's like co-ownership type of things. There's lots of things that you can do. I don't want to go too deep. My purpose there was to just give you guys the example to let you understand that there are different ways to close different ways to close a real estate transaction. And the benefit there is you guys get paid. That's what we're trying to do. We're trying to help you guys get paid because you didn't just show up here to learn about mortgages, let's be real, right? We showed up here so that we can find more ways to make money. So that's what we're gonna try to help you do, okay? Who else can I pick on? Well, anybody else? Tell me why you're here. I'm not looking directly at you. So in the black dress, I don't know your name, sorry, right in front of me. Yeah, you.
Oh,
Yeah, why are you here?
I just want to close the deal and get paid.
Close the deal and get paid. She wants to make money. There's nothing wrong with that. My friend who we met, tell me why you're here.
Me?
Yes, you.
Oh, I think that the market, it's slower than it has been, especially during the time rates went up. I just did a deal with someone who also worked with an alternative lender, and that helped us kind of move forward in the transaction. Where, if she had been with CIBC or RBC, I don't know if she'd get to that stage. So I see the practical need for alternatives.
Yes, 100%. Good. So we're all speaking the same language. So let me tell you a little bit about who we are as a business, and I'll tell you a little bit about me. But Uptown Financial Mortgages is our mortgage brokerage, and it's our purpose to pair with realtors and other partners in order to help them and their clients close deals. Period. Hard stop. I can let you read this. This is the fancy jargon that the marketing team put together, and yes, please read it because they'll get mad. But the reality is, I'm here to help you make money, close more deals, better client relationships, keep you plugged into the transaction, and make sure that throughout that journey, you know what's going on to protect your commissions and close more deals. That's the reality. The rest is to give you something to read, right? Now, we talked about alternative or creative financing solutions. I like that word because it's actually like plastered all over our websites. We are, Uptown Financial Services, creative financing, alternative financing. What does it mean? What does it actually mean? What does alternative financing actually mean? Anybody?
Alternative to the banks?
Alternative to the banks, yes. It's an alternative to the banks, right? Because the banks have very specific lending guidelines that you have to fit in. And each bank has their own lending guidelines. So they paint this box and kind of looks like this. And if you don't fit in the box, you don't get a mortgage. It's just that simple. So then we go to TD and we try to fit in, well, the TD box probably looks like that, and you try to get a mortgage. But when you don't fit, where do you go?
Subprime market, private lender.
Subprime market, private lender. So subprime market, that's like a nasty word.
Sorry.
Okay? I'm gonna say let's look at alternative options,
Okay.
or what we say in our industry, we just call them B, right? We have our A channel, which is our CIBCs, our RBCs, our TDs. That's kind of like our A, right? And then we have our B, which might be like the home trusts of the world, the EQ banks of the world. Credit unions are kind of like A minus. They fall in this weird space where they don't have to conform with some of the rules. I'm not going to bore you with that. But the point is there's different options outside of just the traditional bank. And that's what our job is. Let me take that back. It's our job to bring those options forward to your clients in order to help you close more deals. That's what this is. So let me take you through it. If I go the right way. What you're going to learn today, hopefully, we're going to break down a little bit of mortgage options, A, B, private, because it's relevant to the times. We're going to talk about the first-time home buyer and how to get them approved. We're going to talk about how private mortgages can save your deals. We gave an example. I'll give you another specific one because I've used it time and time again. And then we're going to talk about how we're going to support you as realtors, business owners, entrepreneurs, right? Because that's what this is about. So mortgage lending, this is the fun stuff. I'm going to power through it. A lending, traditional banks, credit unions. Who's this for? Because that's what this is about. A lending, high income earners with consistent salaries, excellent credit scores, the people that fit in the box, right? Great. We want those clients. Easy clients. Let's go find more of them, right? But we know not everybody fits in the box, maybe even some of us in the room, right? We're not consistent income earners. We're not, salaried employees. Great credit, hopefully, right? But we probably don't fit here. So how do we even service ourselves, right? Because we talk about servicing our clients. How do we help service ourselves? We'll get there. B lending. I like that better, right? Subprime. It was just like subprime. I'm not even gonna go there, but the word's like a nasty word that was used back in 2008. Was that the 2008 crisis? That was subprime. And so I don't use it anymore. But before, yes.
Was it an American term?
Yeah, it is. It was an American term that crept in. I'm not going to completely sidebar, but it was an American term that crept into the market, talking about different types of mortgages that they put together and sell. And it's, yeah, right. If you guys, if you want to learn about mortgages, there's some cool movies I can bore you with. But yeah, anyhow, moving on. B lending. Who's this for? Self-employeds, people like us. Credit scores, I'm going to say lower credit scores. They still have to have decent credit. Clients with unique financing situations. So people that might have higher debt loads, possible. People that have non-standard income, so realtors, right, non-standard. Key characteristics, slightly higher interest rates. You're not going to get, the bank's offering $3.99. You're probably going to be, 4.5. Right? But you get a house, you get an investment property, you get. It's a trade-off.
Can I just ask?
Of course.
Historically, other than, second mortgages were always higher interest rates. But banks, I was always given the impression that banks charge the highest interest.
Absolutely not.
No.
Banks charge, so I'm going to say your typical Schedule A bank, your Big Five, or I don't even know, it's probably Big Eight now. But your CIBCs, your TDs, your Scotias, your BMO, your RBCs, your whoever else I'm missing, right? Because there's so many of them, right? Everybody has an option. All of those are your typical banks. They generally offer your lowest interest rates on your mortgage products, right? Because they have large deposits, so on and so forth. Now, outside of those companies, you have different types of lending options, financial institutions that offer mortgages as well. Some might be, like we mentioned before, EQ Bank, Home Trust, First National, credit unions.
Butler mortgages?
But Butler Mortgage is a mortgage brokerage. Don't let him fool you, right? He is a mortgage broker just like me, right? I'd be putting Uptown mortgages, I can get you a mortgage. I can get you a mortgage, but it's not his money. Right? He's giving you a TD mortgage, a Scotia mortgage, just like we can give you a TD mortgage or a Scotia mortgage. We'll talk about what makes us different later, right? But the key characteristics for a B mortgage is basically someone that doesn't fit the bank box, and we still need to get them a mortgage, right? Slightly higher interest rate, maybe a small fee depending on the credit score of that client. There might be a small fee that's charged to them. But more flexible options, which ultimately lets them close, get into the home, start appreciation, and benefiting, which is our purpose. Private lending, flexible financing solutions. It's for basically anyone that needs flexibility in that transaction. Period, hard stop. You don't fit A, you don't fit B, or maybe you fit A and you fit B, but you don't have time, right? I found this home, the deal is now, and listen, the banks aren't gonna get you a mortgage, but I can pick up the phone, I can call Clyde at Uptown, he's gonna be able to get you a private mortgage, we can close this thing today, and we know that we can take it out with a bank mortgage because we would have qualified. That's competitive advantage. Because when my clients go in to buy a home, they don't have to worry. We look at the numbers, we know what they can afford, 100%. But if we need to be able to say we're going in and we're putting in a true bully offer, that's how we go in. And you can't compete because I can close tomorrow with real cash. That's the reality. Because I'm here to help you close more deals, make more money, right? That's an advantage of private lending. You can't offer that with any bank, period, hard stop. Go ahead.
How short-term can you go?
How short-term? Depends on the deal, depends on the borrower, right? So if I have someone that is like AAA, meaning they fit in the banks, we've run the numbers, we know what's going on, and all that's really going on here is this is a sweet deal, they need money, no problems.
My point is about the terms is like the duration of borrowing. Can it be 1 year, 2 year?
100%, yeah. So our terms will be anywhere from 6 months. That could be 6 months, 1 year, 2 years. It could be 6 weeks. It's private. How long do you need the money for?
So you have
Yes,
flexibility.
we have flexibility. Yes. So we are not just a mortgage brokerage, meaning we lend money, right? We have access to our own capital, so we set our own mortgage terms. That's what I was saying that makes us a little bit different. So if you say you have a client that needs, a $1.5 million to close on Wednesday, because, no problem, we're gonna help you structure that deal. The question that I'm gonna be asking is, how is that money gonna get repaid? And as long as you know, or better yet, as long as the client knows, then there's a deal here,
Sorry
right?
to interrupt. I didn't want, I prefer.
That's why we're here.
Just
No,
gonna
don't
ask the
apologize.
question at the end, but
No problem. Good question, right?
Excuse me.
Yes.
Is there a fee for the lender?
It depends on the deal, right? Good question. So if we take you to a TD, a Scotiabank, a BMO, no, there's no fees for that, right? Your client gets the benefit of working with someone like me and my team, but there's no fees that would be charged to them, just like if they walk into the bank, right?
So a lender, no fee?
A lender, no fee. But if we have to take them to B or private, there is going to be a fee applied from the lender and then in turn by us, because we have to get paid just like you guys have to get paid, right? But the benefit is, again, closing the real estate transaction. Because if we get in the fee conversation, we all lose. The reality is, why are they buying real estate today? Why? It's a down market, so on and so forth. You probably found something that you really like. It's a great business opportunity. Maybe, who knows, right? We'll talk about those things. But whatever the reason is that they're transacting, we're here to help facilitate that. We're not here to talk about 1% that we're going to charge you or the 2.5% that the realtor is going to charge you. We're not here to do that. Okay? But flexible. One of the benefits of a private mortgage, interest-only payments, which means your mortgage payments are going to be generally lower, easy to manage, fixed payments as well. And we talked about why it matters to realtors. Simply, we can help you save deals, we can help you close deals. That's really what's more important. You want a private mortgage today on a purchase anywhere in Toronto, 75% loan to value. Okay, just show me a current appraisal, right? I don't care about credit. Just show me how, how much do they make? Where's the money coming from?
You said 75%.
I'm just giving you, go ahead. Yeah, I can go to 80. I can go to 80 if you need me to. I just need to know. Current market valuation though, right? I'm just saying no questions asked. You want no questions asked. I don't even, give me who are you? So give me your ID, fill out a credit application because we still need to know. And like no questions asked, 75%. I don't care at 75. It's current value in Toronto. Come on, what are we talking about, right? You want me to go to 80? We're gonna ask a couple questions, right? They're not gonna be a lot, it's still private, right? How much do you wanna tell me? How much you wanna tell me will dictate the rate that I'm gonna give you. That's the reality, right? If you wanna tell me more,
That's a good way to say it.
yeah, I'm here to do a deal. I'm here to close a deal just like you're here to close a deal. My deal is mortgages, my deal is money. Your deal is closing the real estate transaction and their deal is buying the real estate. We're all here to make money, right? So tell me what you want and we'll try to structure a deal, right?
Do you also offer bridge loan?
Of course. Bridge is just fancy terms put around private money,
Yeah,
right?
exactly.
I need a bridge. I need private money for 30 days. I need private money for 10 days. I need private money for 2 days. Bridge.
It's just very common.
Yeah, of course. Yeah. It's like subprime, right? Haha, see what I did there?
Such a technical.
But yes, we offer bridge loans. Bridge loans are determined by how long you need to hold the money for the borrower, the property, all these fancy things. Yeah, and we can put you in a bridge even with a bank, right?
Yeah.
Banks bridge. You don't have to bridge private, right? So if you have a TD mortgage that's closing, and I'm just using TD as an example. I can't remember if TD actually does bridge, but if assuming they do, Scotiabank, right? They'll be able to bridge you, give you the money for a period of time, and then allow you to close that Scotia mortgage or that TD mortgage. If you just need true bridge, meaning I just need money for like 3 days, 4 days to do what I got to do, yeah, that's private. Yeah. Okay. Continuing on. This one I talked about. So how private lending rescued a real estate deal in crisis. So this was a client of mine. They were working with a realtor for a long time, bidding on houses in Etobicoke. Does anybody work in Etobicoke, by the way? Okay, so you guys tell me, okay? You have buyers in Etobicoke trying to buy right now 1.3 million. How competitive is it?
Very competitive.
Of course, anywhere in Etobicoke with that amount, good luck to you. You want to buy a house in anywhere else, don't go to Etobicoke, no problem, because in Etobicoke there's still bidding wars. That's reality. So they wanted to live in Etobicoke, haha. So I said to them, okay, no problem. Or pardon me, I just gave it away. Their realtor said to them, okay, no problem. They found their house in Etobicoke. They signed a purchase agreement. It was, I don't even remember, a few days before closing. I want to say it was something like 10 days before closing. And they got a call from their bank. They didn't come to me. They went to RBC. And they got a call from RBC, and RBC said to them, you have a bunch of new credit that has been utilized, because they actually went out and bought a new car. And not thinking that the car that they picked up, because new house, new car, right? Not thinking that the car that they just purchased would hinder their mortgage transaction. And now all of a sudden, RBC is saying you can't close because that $2,400 car payment for your Range Rover is actually causing you not to get this mortgage. And so all of a sudden, realtor gets a call. That's where you guys come in. And the client is saying, well, I don't have a mortgage, which means I can't close. And I know we just spent 4 months battling in Etobicoke, and all of a sudden, I'm going to lose my dream home. We have a problem. Because no one wants to lose the money that we're trying to, and the client doesn't want to lose the home. And so, at the end of the day, what ended up happening was the realtor referred the client. The client ended up closing with the private. we actually ended up moving the car loan out of their names into the dad's name, and then provided all of the financing information that we needed, and we sent that mortgage to TD Bank. And all of that basically, at the end of the day, saved your commission. That's what we're talking about. Because the other way, you just showed houses for how long in Etobicoke? Yeah, good luck. So why private? That's why private, okay? I'm gonna skip all this, but at the end of the day, private gives you flexibility. When you have tight timelines, it's where to look. If you have things that I'm gonna call non-standard, need flexibility, it's where you gotta go, right? But there are a ton of other options in the A and B side of the business. That's where we wanna be to help keep our clients happy. If we end up in private, it's okay, we're here right now, but how do we get from private to B or from private to A, okay? But we use the private mortgage to help close the deal, to help us make money. That's what it's about, okay? So I'm gonna ask the question, this way I can drink my coffee. What types of real estate transactions are happening today? I don't know, realtors.
I sold in the high of the market in 2022. He bought it as an investment for his daughter who ended up leaving, so he did the math and he realized he'd take a loss, but that would be better for his balance sheet than holding the property. So I would say it's not like super distressed. I would say distressed investors are actually exiting the market. Some first-time home buyers are peeking around, but they're still taking their time as well.
Yeah, okay, so I'm hearing sales for distressed investors. I'm hearing opportunity. And I'm hearing first-time home buyers peeking their heads saying, now the time.
Downsizing too.
Downsize, always. There's always gonna be people that say, I don't want this house anymore, it's too big, I don't wanna clean it. Or, you know, I look at the house and good morning, there's a ton of work that needs to be done. There's space right here, I'm not gonna bite, I promise, right?
I love your place.
Thank you. I love yours as well,
Thank
right?
you.
Downsizers are always gonna be saying, you know, whether the house is too big, my kids have moved away, they're gone to university, I don't need this anymore. I needed the pool and the 5,000 square feet when they were growing up, but now they're 40, they have their own house, and I don't want to clean. I want to take the money out, I want to go spend it and travel to Europe. That's what I would do, right? But yeah, exactly, right? Well, I'm not leaving the money in the house. See you later. I tell my kids all the time, number one, you can't go to school in Canada because you got to go. And number two, when you're gone, Dad's selling this house. We're gonna have a couple places all over, you know, Toronto, wherever, but we don't have the big space anymore. You want, you go, right? Have options. No? It's better to have options, right? I'm still trying to get to Florida, right? Anybody that's in Florida already, I'm very jealous of you. Sandwiches. So purchasers, downsizers, first-time home buyers, downsizers. What else? What else are we seeing today?
My most recent deal was a client of mine who owned real estate. So she has equity. She has existing equity and a strong job. And she used the market as an opportunistic play because it is relatively low. So she's not like old. She has time. So I think that as well.
So she's saying, I see an opportunity to invest in real estate when the market is down, understanding that the market is gonna go back up. When is the question, right? That's like saying you bought, I don't know, I'm gonna use a bad example, okay? You bought, everybody, I'm not the oldest guy here, so BlackBerry, RIM, Research in Motion, okay, right? So, BlackBerry stock, we saw it go like this, we saw it go like this, we saw it go like this, but if you bought it down here, when it was Research in Motion, BlackBerry like 1, 2, whatever the heck it was, and then you followed that thing all the way to the top, if you were smart, you sold here, because, right? Same thing with real estate. So she's saying, whoever her client was, smart, is saying, I see the value of real estate, or pardon me, I see that the value of real estate has come down dramatically, and I believe, speculator, that the value of real estate will rise again. If that is the case, I am willing to invest how much she's going to put down, $200,000, $300,000 into that home in order to then mortgage the rest and then appreciate over time. That's the win. Smart person. I'm making the same bet. Yes, Milan.
When people buy, they're looking for a separate entrance so that they can use the basement as a...
Yeah, separate dwellings, so 2 separate legal dwellings.
Is there anybody that will recognize the rental income potential of the basement as far as the mortgage?
Yes, 100% absolutely.
Where there is no 2-year history.
Doesn't matter. Legal rental dwelling, so has 2 separate units, kitchen upstairs, kitchen downstairs, side door, front door, registered with the city, so legal dwelling. I'm covering all the bases, I think. Underwriters in the back. But assuming that it checks all those, he's looking behind me. Yeah, it's you, right? Assuming that it checks all those boxes for a legal dwelling, then the answer is yes. And in fact, one of the things that I say to my realtors, and it's funny because, oh man, time flies by, so don't quote me on the time, but there's a lender in the broker channel, and the lender is Strive. Okay, you guys are probably like, who the heck is this? It's, surprise, or Strive. They have this mortgage product where what they were doing is they'd say, okay, you buy this property, it's $800,000. And if you have the ability to put a separate legal dwelling into the basement, what we're going to do is we're going to give you the money up front, and it's going to be what we call a purchase plus improvements. Has everybody heard of that? So we're going to do a purchase, buy the house, $800,000, then we're going to improve the house by putting in a second unit. And when we do that, we're A, going to give you that money to put that second unit in, and 2, understanding that when this unit is installed, we're going to do now a new appraisal of the property that's going to say, what's it worth? $800. With this unit in the bottom, how much could you get for rent? I don't know, City of Toronto, whatever it was. I can't remember. Annex, whatever it was. What's the rent that you can get? I don't know.
$3,000.
$3,000. I agree with you. $3,000. Now, $3,000 of that, we're going to let you use, don't quote me, I think, Lou, what's the rental amount that we're able to use again?
So it depends on the lender, but it's anywhere from 50 to 95%.
There you go. So let's assume, I can't remember Strive's program, but let's assume even if they're 50%, that means $1,500 gets added to your income to help you qualify for this home. Now, here's the benefit if you are smart, and I'm a numbers guy, okay? I look at this and I say, okay, wait a minute. I'm gonna be able to buy in an area, top notch. I'm gonna be able to put in a separate dwelling to make money. But if I do that, when I run the numbers and what I make is still, meaning your borrower, your client, the person that's buying the home, their income is still, fixed. So if they would have qualified for 800, now they qualify for 850, 875. Could they buy a slightly bigger home? Potentially, right? If you put all of the pieces together, could they borrow more money? Could they buy a bigger home? The answer is yes. They could buy a bigger home when you put it together properly, which means for you guys, because I'm here to show you how to make more money, bigger home, larger sales price. You guys follow me? I don't know. It's quiet. All right. More commission. Yes, thank you. Hello, 2.5% on whatever it is. I like money. I don't know. I'm a money guy. You guys are realtors. I get it.
Sometimes it's a difference between somebody being able to afford and not being.
Yes.
So the transaction or no transaction.
I agree. I just take it down to, listen, I got to pay my bills. You got to pay your bills. I agree. I build my business, and I think I said this to somebody on my way up. I built my business on client. I built my business on relationship. I built my business on network. That's why I'm here today, right? Because of this gentleman here. I've known him for so long. He's been here for forever. We've been talking about this. And I said, Cam, you know what? It's time. I have to come out. I have to talk to the people, right?
Sometimes if you're able to do that too, as well, the perception of you in the client's mind would be forever imprinted.
finding a way to stand out amongst, I don't know how many realtors there are in Ontario.
80,000.
80,000 realtors in Ontario. How do you stand out? How do you stand out? I'm not asking you to tell me, I'm asking you to ask yourself. Because if you haven't found a way to stand out, maybe this is one, giving them options. Maybe you're, I don't know, everybody's different, right? You have your area, you have your, you work with investors, you have commercial, your whatever it is. Or you're like me, I say, okay, whatever it is, I'll work on it. I'm just gonna bring in the expertise to help me close it if I don't understand, because I believe in partnering. I believe in closing business because everybody wins. That's me, right? Because I'm a network guy, you know me, right? I don't care. Cam, if you make money, I can make money. Everybody makes money. No problem. Now, one thing that she said that I'm going to talk about today is the first-time home buyer. Because the first-time home buyer in this market is your key to finding more real estate transactions. Because if you can find a first-time home buyer that is, no, let me take this back. Let me ask you this question. What does a first-time home buyer look like today? Does anybody know? And my team can't answer because they already know. Go ahead, in the back. Newlywed couple. Okay, what does that mean though, today? 30s. 30s? Okay, I would challenge that and bring that number up.
Yeah. Really?
Yeah.
39, 41.
Right there. 40 years old. If anybody, listen, you don't believe me, go ahead and hit Google, right? Right? But today, the average first-time home buyer is 40 years old. I know. When I got, listen, I got gray, so it's starting to show. But when I got started, the average first-time home buyer was like 26, right? And I was like, oh my God, 26, that was me, right? I was leaving my mom's house, I was 25 years old, closed my first house at 26, yada, yada, yada. And I'm like, man, like, I'm just getting started. Like, my mom was telling me stories when I was 16, okay, ma, right? But the reality, generations, time gets added on. We all understand that because, well, there's a few things that contribute to that, and we're going to talk about them. Keep me honest for time, because I'll talk all day, by the way, right? So, the average first-time home buyer, 40 years old today, but what do they look like in terms of profile? Does anybody know? Salaried professional, meaning stable income, good credit, but they fit that box I was talking about earlier, right? That I want to be TD. Hi.
What is good income?
What is good income? Anything that falls within our acceptable guidelines. Haha. So what does that mean, right? If you can, I had to. I'm sorry, right? Mortgage jokes. So when you want to buy a home, right? What will happen is we will look at how much you make, right? And we will say you're able to use 32%, 32.40, 35.44, depending, of your, so 32% gross debt servicing, which is principal, interest, taxes, and heat, right? Condo fees are thrown in there, 32%. We can increase that to 35 depending on the lender. And 40% of total debt servicing, meaning of your income, principal, interest, taxes, heat, condo fees, and remember the car loan I told you about earlier? That car loan is what we call other debt. So car loans, credit cards, line of credits, student loans, yes?
I was just wondering, could the difference in the deposit being saved up?
Yes, that's a huge part. I was going to talk about that, but thank you for bringing it out. That's why, yes. Of course, when I bought my first house, $337,000. If I wanted to buy that same house, would I still go buy like every little while, because I don't know why I sold it, to be honest. Because I'm like, 337, I sold it for 500, ching ching, it's worth 1.3 now, right? What did I do, right? Don't sell, hold on if you can. Go ahead.
Is one of the criteria from some of the banks that you have to have a certain amount of money in your bank to sit in there.
Yes, 100%.
Could you also use that private lender to borrow the money, leave it in the bank so that an A lender can see the money?
So the way that you structured that question means I'm going to say no, because you can't borrow a private lender's money to put it into your bank account to show the bank that you have money in order to buy real estate that you never owned. You can't do that. That's a long way. But what you can do is underwriter earmuffs. I didn't say this, okay? Luigi is my, Luigi Chirocco, he's my senior underwriter for Uptown. So what you could do is this, okay? People say you can't use debt to buy property. You can't use debt to buy property. I would challenge that. You can, so long as, okay? See what I did there? You can use debt so long as, one, you have a credit card, you have a line of credit. I'm not saying to do this. I'm just saying you want to buy property. You know that the market's about to take off and I got to get in before it takes off. It happened to me, right? I've been doing in real estate for a long time. Have I done this? Maybe. So you can, so long as you have a line of credit, $50,000. Most banks will give you $50,000 on a line of credit. Again, I bought houses at $337,000, $50,000 against $337,000. That's a lot of money, right? Cash advance your line of credit, put it into your bank account, let it sit for 90 days. Because the bank's going to say, I need to see 90-day history of this down payment against the close, this down payment for the close of the home. 90 days. They might say, oh, $50,000 one shot, I need 120, so I need to make sure that money's staying there 4 months, right? So now when they say, okay, where did the money come from? It's mine. I had it. It's mine. It's yours. But they're going to see a line of credit, 50,000 used. Okay, that's a liability. Now, if you are a strong income earner, meaning you make a lot of money on paper, what you're struggling with is down payment because the value of real estate is up. But I make good money. I work at the bank. I'm a doctor. I'm a lawyer. I make good money. But I don't have $250,000 to close a home today. But if I needed to and I wanted to buy, I don't know, a condo in the city. Oh my God, that's like the nastiest word right now. Nobody wants a condo in the city. I want a condo in the city. Has anybody been in Toronto in the summer? Say it again.
It's fun.
It's fun. It's amazing. Toronto in the summer, you got restaurants, you got entertainment, you got water, you got beach, and now it's like a nasty word.
Yeah, it's scary.
Yeah, I'm scared to be in Toronto in the summer. Me too. Just sell me them at a discount. I keep buying. Right? Being honest. Depends where it is, right? There has to be upside. If there's not going to be upside, ooh, you're going to take a bath, right? But why are you buying, right? First-time home buyer, I'm young, I want to be in the city. You know, you can sell that. You're a young professional, you know, whatever it is. What is the persona of that first-time home buyer? What do they look like? Where are they? I asked this question in a mortgage talk that I was doing last week or whatever it was. So if we know that the average first-time home buyer is a 40-year-old person, probably professional, I'm going to ask you guys one question. Where do you think the majority? No, I'm gonna ask you this question. Does everybody have? I don't even know where mine is. Can you hold that thing up in your lap, please? No, that right there. Yeah, can you hold that up and just show everybody? Does everybody have one of these? Yeah, it's a cell phone, right? It's a wonderful device, and everybody has one now. And if we know that the average first-time home buyer is roughly 40 years old, and everybody has a cell phone, I'm going to ask you this question. The question is, are you on their cell phone? Are you on the cell phone of the average first-time home buyer? And if you can't say that I am, then you may need to ask yourself a question about how do you get there. So how do you get on the cell phone of the average first-time home buyer? Okay, so marketing. Ashley is my marketing director. So, from a marketing perspective, how do you get on the cell phone of an average first-time home buyer?
First, I would do a little migration of your own database on your cell phones if you have anybody on there. Next, I would say social.
Social. Okay, so she said a great word. It's called social media. Has everybody heard of like Facebook, Instagram, TikTok, Twitter? I don't know, what am I missing? Google. Oh my God, that's a big one. How do you get there? Are you on Facebook, Instagram, Twitter, TikTok, da, da, da? If you are, great. Check mark. If you're not, get on. That's my free tip to you. And it shouldn't even, like if you're not on, well, there's a big problem, right? Okay? But you need to get there because you need to get in front of first-time home buyers, and then you can start asking yourself, how do you build, whatever it is, social media campaigns that are going to attract them, so on and so forth, if you're trying to appeal to that first-time home buyer. Great tool, ChatGPT, if you haven't heard about it. Yes.
Obviously, if you're on there, you always have to be updating your information because they do a search and they check your most recent information.
I would say this. One, it's all about being social on social media, meaning you got to connect. And yeah, you want to have some relevant things. You want to be posting once or twice a week. So what are you doing that you could post that would be relevant? I mean, you're here today. That's a start, right? So have you utilized that as an opportunity? And then we're talking about first-time home buyers. That's an opportunity, right? Someone should be smart picking up their cell phone, start filming, right? And then, now you can use that content to say, hey, I was in a presentation today talking about first-time home buyers, or where they were talking about first-time home buyers. I learned a couple key things. If you're a first-time home buyer, you want to learn about everything I learned about today, give me a call, right? Right? But that's the reality, because you got to be where they are, right? If that's where they are, if that's you, right? Go ahead.
Are we going to get a copy of this in video?
Next question.
We will send the link to Cam. You can socialize it with all of you. So yeah, 100%. You can share it, right? And
Can we share components of it?
Yeah, feel free. Just don't forget to like and tag and do all that stuff. What? Say it again.
Did you all sign your waivers?
So yeah, we got to talk to them about that, right? You are here, which means you consent to being recorded. Yes, thank you. So yeah, so you got to be where they are. Talking about first-time home buyers, I'm getting hot. Which is going back. Sorry, talking about social media is that's a great way to get in front of them. Okay, now. What we do is help first-time homebuyers get approved, okay? And because there's no point, again, of you guys going out there, showing them the condos, showing them the houses, taking them to a Etobicoke, they're fighting, and we can't get them approved. There's no point of that. Now, the question is, how do we help them get approved? Well, the real question is, what are the challenges that they face? And my friend over here, what's your name again, sir? Henry. Henry said to me earlier, one of the big challenges that they face is saving for the down payment, 100%. And I'm going to say there's this really great bank that everybody has, and it's called the Bank of Mom and Dad. Does everybody have one of those? Right? I went there, proud. Mom, I need $15,000, right? She had to find it because I wanted to move out. I'm done. I'm 25. Like, I'm gone, right? So she gave me 15 grand and she said, go find a house. I said, that's not enough. Let me use my line of credit. That's reality, right? Now, the other challenge is meeting income requirements. We talked about this. Maybe they don't make enough because the cost of real estate is this. What we make in Canada is this. What can we afford? They started making them. They're calling micro condos, right? But you can't even get financing on those things anymore. So the other problem that we have is passing the stress test, because even if you make money and you could afford to buy this house 5 years ago under the old rules, now we're going to stress test you and we say, can you pass this new cool thing that says it doesn't matter what you make? We just want to know if we put you through extreme stress that you can still afford it. Can you pass that? I don't know. Can you? Not a lot of people can. I can't. I don't know. If you can, great. Congratulations. You got a TD mortgage, RBC mortgage, CIBC mortgage. Good for you. Great rate because you passed the stress test. But most people need flexible financing solutions. Need. It is a requirement to close business today. And if you don't fit RBC, CIBC, whatever it might be, then where do you go? Right? We talked about it. So, ways that we can assist. If people have what we call alternative income sources, meaning stated, meaning I'm going to say alternative income, non-standard, non-salaried income, right? They are a plumber. And I go and I close my, I fix pipes and they pay me some in cash and I put it in my bank account. Some are email, what do you call them, EMTs, and it goes to my bank account. And that's non-standard, right? You're still a plumber, you're doing nothing wrong, you're making a living, but you're not salaried. Can't take that to TD, CIBC.
Someone else.
Yeah, right? So what I would do is I would say, well, that person, that plumber, that electrician, I'm sorry, plumbers and electricians, greatest clients ever, because they're always busy. Tell me who, if you know a plumber or electrician that's not busy. Because if you find one, then send them to me, I'll make them busy, because I got lots of clients that need stuff that need to be done, right? Because plumbers, electricians, they're constantly busy. They're constantly doing things, side jobs, even if they're working in the condos. Condos aren't being built now, they're doing side jobs. They're doing residential side jobs and getting paid in cash. And the smart ones are putting in their bank accounts, because if they want to buy a house, then we need to be able to show that income. And that's how I'm coaching my clients. If you're a plumber, if you're an electrician, to make sure that we can use that income to qualify you for a mortgage. That's why I'm showing you houses right now. You see what I did there? Okay? So if you have clients that fall into that persona that are looking to buy, you know, plumbers, you know, people that make, I'm going to say cash, but put it into the bank, that's a good way to transition them into buyers, especially now. Okay? And then again, using those stated income programs that we have in the broker channel, we can get the mortgages. So we can take them to lenders like EQ Bank. And EQ Bank says to us, okay, Clyde, show me what's going on. Make the deal make sense. And what we're going to do is we're going to say, well, here is Mr. Plumber, Mr. Electrician. They have been making deposits through their bank account for the last 12 months. And the total balance of this 12 months is $360,000. That will be the income that we can use to qualify for a mortgage. And so we're going to say, okay, we're going to use whatever, 50% of that income to qualify, $180,000 a year. How much does $180,000 a year get you as a house in Toronto? I don't know. What would we say? Lou, do you have a number? What do you think? $180,000 income, $700,000.
$700,000 mortgage.
Mortgage. No. I mean, yeah, so $700,000 mortgage means...
And whatever they're putting down.
Exactly. So most of our clients, let's say you're probably putting down, I don't know, 20%? 900. What's the commission on $900,000? $20,000. Do you know anybody, do you know anybody in your database that you can have that conversation with? Because Cam just told you it's a $20,000 conversation. I'm here to help you make money. How many people fall into that persona? Because you can be out there educating them so that way you can make money. You can close real estate transactions. Again, flexible financing solutions, helping you make money. The other piece for the first-time home buyer that I like is the cash back offer. So banks like TD, they say, hey, if you fit into our extremely tight credit box, and you're gonna have to put down whatever it is, 5%, 10%, 15%, whatever it is, you're You're going to put down your deposit or your down payment. And maybe after you put down this down payment and you pay your lawyers and you pay your land transfer tax, and then now you're in your home, well, maybe you got to buy a couch, maybe you got to buy a bed, maybe you got to buy a lamp. And if you're one of those people, then great, we're going to do this thing and it's called cash back. And we're going to say we're going to give you up to, like, I don't know, $5,000 cash back. So that way at least you have something to get you started, right? For me, I use that cash back for the first time home buyer as an extreme sales pitch. I'll be honest with you. Because I'll say to them, we've done the math, right? We know that it's almost every dollar when you're buying your first house, right? That's the reality. It's almost every dollar because you saved forever. And then I forgot about land transfer tax. I forgot about. And now I'm like, I have nothing left, but I bought my house, hooray. So I say to them, well, if we went to TD and we know that's going to give you $4,000, then why don't you go out and buy that super cool couch that you probably would have never bought? Because this is like a way to celebrate the closing of your home, right? And now you create an emotional attachment to the product, to the couch, to the transaction. You just create this nice little circle where
A salesperson.
yeah, of course. If you're not a salesperson, what are you doing here, right? Right? We're in sales, right? The difference is we're selling, and I said this to someone earlier. I'm selling mortgages. You're selling property. It doesn't matter what you're selling. It matters if you have the ability to get clients, understanding who's doing transactions today, and then being able to give them the right solutions to close those transactions. I know, like we all walked in here today and we're like, what are we talking about? I don't know. I'm talking about making money. That's it. Okay? There's a great product that I'm going to show you, and it's called the Mortgage Reset. This one I use for clients that are, I'm going to say clients that are non-traditional. And hopefully, give me a second here. Can I do this right? Does that work? Okay. All right. So this one I use for clients that have come across what we call unexpected life events. Okay? So part of my expression, shit happens. Okay? And when shit happens, people sometimes need to buy other real estate. So shit happened, I'm going over here. You can stay over there, right? I got to buy a new house. So when shit happens and now there's two people, you stay over there and I got to buy over here, now how do I service this client? So husband and wife, maybe, they separate, husband has to buy a new home. It's real. How do you service that client? Number one, it's a great market if you're not there, being real. If you know any divorce lawyers, pick up the phone. People get divorced every day. It's a great place to make money because I have a husband and a wife. They finally went through separation. Someone's got to buy. Someone's got to buy, right? And so if they got to buy, you've taken the time, you've walked them through. Well, first you picked up the phone, you called the divorce lawyer, you said, hey, here's who I am. I'm Milan, and I get the ability to help your clients, find homes in this time because I'm, this guy, I'm very well spoken, And now you get the lead, and now you've taken them out, and now they found the home, but now someone's gonna need a mortgage, sorry. And if they need a mortgage, chances are they're not gonna qualify with TD, CIBC, Scotia, because, well, you bought one house together over here, but now you're separate. But you need a house and they need a house. So how do we get you a mortgage? Maybe they were married for a period of time. Maybe they bought real estate when it was down here, because the sure thing about real estate we talked about earlier, what goes up must come down, but what goes down should go back up, yes? So if they bought real estate down here and the value of the property is here, someone's going to be owed a chunk of change. We take this chunk of change and we apply it to the purchase over here. But I gave you the problem. They bought the house, this house, together. How do you qualify for two houses, or pardon me, how do you qualify for a house on your own?
You have to divide them.
Oh, well, the problem is, sir, we were separate, but I don't want to live with you. Do you want to live with me? I don't want to live with you. The reality is, if I don't want to live with you and you don't want to live with me, we both need somewhere to live. But we have this wonderful thing, it's called equity, because I bought when the value was down here and now it's over here, and if the value of the house was $500,000 and now it's $1 million, you owe me $250,000. I'll take that in cash, please. And when you give me my $250,000, I'm going to go buy this house over here.
Do you have good credit?
Of course I have good credit. We were paying our bills, right?
Yeah, but separation.
Yeah, separation does crazy things. Yeah, exactly. We're going to talk about that, right? No, we're not. But when life throws you some crazy events and you need to reset, there's a mortgage product for it. And the product basically says, when life happens, how do we respond? So in this case, this lender is saying, if you can come up with $350,000, if you're buying a house for $1 million, meaning 65% of the value of the home, I will give you a mortgage. No questions asked. As long as, haha. Credit bureau, pull, 30 days. So is it a current credit bureau? Yes, check mark. Credit, who said credit? No minimum credit. Why? Shit happens, especially in divorce, right? I'm not paying, you pay. I'm not paying, you pay, right? Yeah. Term, 1 to 3 years. I heard what you said, and no, it's not.
Says private, though.
No, it's not. Interest, accrued interest. So mortgage payments are not required. Again, a huge benefit, and it's not private. Confirmation of permanent residence is required. You have to be a Canadian citizen, you have to have permanent residency, not Canadian citizenship. Required for all, so independent legal advice, there's a separation that's happening, whatever might be going on, you need to understand the mortgage contract that you're signing because it's non-standard, okay? The home must be owner occupied, you have to live there. We're talking about, again, couple separated, you're gonna live there. Residential properties with 1 to 4 units. We talked about buying a house, putting in a separate legal unit on the bottom. Maybe you're gonna make some rental income. Lots of ways to help you qualify, afford this home. In prime urban markets, Toronto, right? Assessment of property value required. We need an appraisal, has to be current dated. What is it worth today? Because you're buying today. Purchase, 90-day rate hold. You're not refinancing, so don't worry about that. Client has to pay property tax. Everybody's got to pay property tax. If you can check, the big one's right here, 35%, you got a mortgage, and it's not private. It's a credit union. And credit unions have better rate than private. That's the reality. But what I'm selling is an opportunity for husband and wife to say, you stay here, and I go over there, I get into the market today when the market is down, and I get to benefit when the market goes up. But really, ready, emotional sales tie, maybe we had kids, and I'm going to say, well, the kids are going to benefit from having both properties, especially in the down real estate market. You can buy this home, and long term, how are you tying your sale? Yeah.
Try to bridge.
Well, no, they're not tied together. I'm just saying for the family, it's a way for the realtor to say, hey, here's an opportunity, right? Versus waiting to buy real estate. Waiting to buy real estate doesn't make you guys commissions. That's reality. Waiting to buy real estate doesn't make you commissions. You need to find buyers that are willing to transact now. Where are they? People get divorced every day.
So a B lender is that?
This is a credit union. Yeah, B, quasi B, right? I would say more A minus, right? Yes.
When you say mortgage payments are not required, are you saying interest only?
So on this product, what they do is they add the mortgage payments to the end of the term. Because if, let's say, it is a separation or a divorce, then what happens is a lot of that money is going to be tied up in legal fees, getting things settled and that type of things. And if that is the case, then cash flow is not really something that you have right now. But you will when it settles out, right? So they're going to say, don't make any mortgage payments for 1 year, 2 year, 3 years while you're going through this separation, getting divorced and dealing with it. And then at the end of the 3 years or 1 year or 2 year, that amount, so let's do the simple math. Let's assume the mortgage payment was $2,000 a month, right? In this market, $4,000 a month, right? They're going to say $4,000 a month times 12 months is $48,000. Okay? You had a mortgage of $650 plus $48,000 means you now have a mortgage of $698,000. You did not make a mortgage payment. You bought a house today at $1 million and you waited. That's it. That's all you did. Where will the market be in 1 year? Does anybody know? Crystal ball in the back? Nobody?
In 1 year?
In 1 year.
Same place.
Same place. In 2 years, where will the market be? Anybody? Maybe up? In 3 years, where will the market be?
Always up.
Always up. 2%, 2%, 2%. I'll take 6% to over 3 years. But if you bought at $1 million today, it went up 2, that's $60,000, yeah? So now that value of that home is now $1,060,000. You still made $60,000. They still both now own homes. The kid has somewhere to go, there's stability, you're now separate, and the best part is you guys closed a real estate transaction. That's what we're talking about.
When a couple is getting divorced, let's say the husband wants his equity. Now the wife must be qualified?
100%, same product. Same
If
product.
not, then have to sell.
If not, then you say, okay, your TD mortgage or whatever that, because we would look at it and say he's got to qualify and she's got to qualify traditionally, okay? He's got to qualify and she's got to qualify. If he qualifies using this mortgage and she qualifies using this mortgage, no problem. If they still need extra money, then we could always use private money to say here's an extra $20,000, $100,000, whatever it is, because there's lots of space, a lot of equity in the property, right? Does that make sense?
Yeah, but let's say they have 3 kids staying with the mother. Is there any advantage of that?
Yeah, of course. I was going to say it the wrong way. There's benefit in the kids. Always get the kids, right? Yes, because whoever has the kids, the majority. So long story short, there's the child support that will be paid, right? So whoever has the benefit of the child support, you'll be able to utilize that to help qualify for the mortgage, right? Whoever has the primary, what's the word I'm going to use? Primary responsibility, custody of the child will also be receiving the child tax benefit, right? That money can also be used to qualify for a mortgage, right? But they don't qualify for TD, CIBC, RBC, BMO. This is, you have 35%, you want to buy a house under $1 million? Done. I like that conversation. I like, let's buy a house now because markets are down. I like, let's go out and buy real estate because I got to make money. I got to pay my mortgage too, right? Will it go up in 3 years? I think so. Speculation, yes. 2%, 2%, 2%. I'm not selling 6, 10% dreams here, guys. I'm selling buying real estate. You're a first-time home buyer. I'm selling to a need. You're a couple that's getting separated. I'm selling to a need. The need is I have to buy real estate. The need is there's a transaction that has to happen. I'm hoping you guys are going to be the ones to do them. Yes.
So does income matter here?
Income here does not really matter. What matters is 35% down.
Yeah.
What will happen is now, because every mortgage has a term, which means it's going to come to an end. At the end of the term, what happens next? This is where working with people like us at Uptown, again, I said in the beginning, we don't just set you up today, you want to buy. We want to help get you in the door. Yes, because. You chose to buy, we're going to help you get there. But once we help you get there, what's the plan to help you keep it? What's the plan to help you turn this home into a good investment, right? Sometimes it's private, B, A. Okay, so I know I've gone long. What I can do is, Cam, I can send this off.
Okay.
So that way they can take a peek through.
Sure.
And I could just say any questions that people might have. That way I can address them right off. I know it's a lot, right? For me, I hope you found value in today. And again, if you have any specific questions, then ask away. Yes. Ooh. She was scratching her head. You had the question. Question? Yeah, you have the question.
It says 1 to 4 units.
Yes. Talking about the product, yeah.
And if I had a situation where there's 4 individuals and they want to buy one building with 4 doors, like a 4-story unit or a 3-story unit.
Is this residential or commercial?
Residential.
Still residential. They're going to live in 1 and then rent 3?
They're going to live in all 4. So 4 different people.
Mm-hmm.
How are you going to structure it? Or what is the best way to structure it?
And I'm assuming it doesn't fit traditional lending guidelines.
Correct.
So then I would look and say potentially B, maybe like an EQ bank. We're going to use their incomes to help qualify quasi, because it's not rental, right? It just doesn't conform to regular bank guideline, right? So maybe it's a debt. Maybe their ratios, how much debt they carry as 4 people compared to the value, compared to the mortgage amount that's required, doesn't fit.
It was brought to me in passing. I just wanted to get your thoughts on it. Forming some kind of trust for corporation. That would hold some sort of money in it, and then put that corporation to offer to purchase that property while having shares on that.
Yeah, so lots of ways you can structure the deal. Whether you structure it as in your personal name or in a business name is dependent on the individual. Now, what I would say is if you're going to buy in a business name and you're living there, I'm going to ask you why you're doing it.
To share ownership.
Share ownership can happen in the personal names just by saying joint owners, tenants in commons. You guys could decide that. If you're going to involve a corporation, I would generally say, or is the purpose of...
So the debt doesn't get carried on their personal names, it gets carried on the corporation.
Now we're talking, okay, so what's the purpose? So they're trying to say, I don't want the mortgage to show up on my personal credit file, right? That is a financing strategy. Maybe they have other assets, maybe they're trying to, or the plan is to acquire other assets. So then yes, I would do that, form the corporation, and then their incomes would help qualify the deal, just like they would have done in their personal names.
So it's still their personal incomes that qualify.
100%, because what other income do they have in order to support the application at this time? None, because it's not a rental, they're living there. If this was a rental property, follow me, now they have their primary residence, I'm going to use my income to qualify for that. You want to buy this rental. This rental is a rental, it's going to make money. How much is the question? So we're going to say 4 units, $3,000 a month. If we're going back to wherever we said, that means there's going to be $3,000, $6,000, $9,000, $12,000. My underwriter said you can use 50%. It's probably higher. Let's use 80. Now you're going to say you use $8,000 a month to help you qualify for the purchase of this new rental property. How much is the mortgage? Well, the mortgage on this is $12,000 a month. You can use 8 to support your 12, which means there's this magic $4,000 that you, as the borrower, need to support. Can you support it? Right? That's the question.
So what would the income need to be to do that?
Depends on the purchase price, right? How much you're trying to buy for. We run the numbers. We put into this magical mortgage calculator. It's like so simple. And, it gives us numbers. Right? So if you have someone that you're working with, my card's over here, take my card, send me your information. Let's have a chat. I can definitely help you. Any other questions? No? Okay, so I'm going to say thanks. Sorry I went long. I should really need to start keeping myself accountable to time. I'll just continue to talk. But thanks for coming out. And if you guys want to connect, my cards are here. Feel free. Okay? Thanks again.